Now, NZX is a listed company. Around about 70% of our revenues are from what we call the traditional exchange businesses. So we run the debt and equity markets in New Zealand. I've got a small derivatives business, and we also run a couple of markets on behalf of others. We run the energy market on behalf of the government, and we run some private market on behalf of one of our largest companies, Fonterra. We also have about 15% of our revenues in fund management, and we've launched a range of exchange-traded funds in that business over the last 12 months. And finally, we have an agricultural business, which is not as bad as it sounds. It's information and data, which we are using to create agricultural risk management products for what is a large part of the New Zealand economy. Obviously, like all exchanges globally, we saw a sharp reduction in market values and we saw a downturn in trading activity. However, since the financial crisis, there have been a number of changes in the New Zealand capital markets. We've probably had our best 5 years ever as an exchange. The government introduced a savings scheme called KiwiSaver, which has gone from zero to about 25 billion of assets under management. We've seen regulatory reform, which has been very positive for building confidence in the New Zealand market. And we've seen the sell down or sale of a number of large New Zealand companies, including 3 by the government, which has renewed retail investor interest in the market. Like most exchanges globally over the last 10 to 15 years, exchanges have diversified away from traditional trading and clearing. As I said, we have done that in 2 ways. One is we've built a reasonably substantial fund management business. The goal of that is to offer a broader range of tradable products for New Zealanders, firstly with exchange-traded funds. And it's obviously good for our core exchange business. We get trading revenues and we provide a broader range of investment opportunities for New Zealanders. And secondly, we recognise the importance of risk management in the agricultural sector. Dairy prices in New Zealand dropped by about 65% this year. We've got a lot of farmers who are wishing, I think, that they had some hedging tools in place. So we have a dairy derivatives market which has grown more than 100% every year over the last 3 or 4 years to provide a good range of hedging for those businesses. Going forward, we're very positive about the outlook for the New Zealand capital markets. KiwiSaver funds under management are expected to grow from the 25 billion that I mentioned to 70 billion by the year 2020. That's the supply side of capital. On the demand side, we have a large number of unlisted companies in New Zealand, particularly small and mid-sized businesses, and we expect that a number of those will list over the coming years. We also expect new and innovative products to be listed on our market, exchange-traded funds being one. And of course, our fund management business will benefit from the growth in funds under management. And finally, of course, the New Zealand economy is in a very strong place at the moment. We're one of the highest growth rates in the developed world, and we have come through the financial crisis much stronger than when we went in. Look, we've made big investments in the business over the past couple of years. We acquired a fund management business and we've strengthened our regulatory and markets functions. So next year's success will look like ensuring that we maintain or regain the operating leverage that we've had in the past. Exchanges typically have a very fixed cost base, and we look forward to seeing that operating leverage next year. And finally, in the 5-year time frame, our role is to operate markets which make a contribution to the New Zealand economy. So we expect that our capital markets business will grow, and I expect a much more vibrant derivatives market for the agricultural sector.